Hey everyone, I'm Anselm. Before we get into the details of what's happening in the Bitcoin market right now, let me quickly share how I approach these charts. I've been working in risk modeling for SaaS and fintech since 2010, and I've been deep into Bitcoin analysis since 2013. My focus isn't about calling price moves, it's about understanding what's driving them. Price is just a snapshot of consensus, but capital flow is what really shapes that consensus. Right now, Bitcoin's stuck in this intense back and forth around $71,000. There's a lot of noise like geopolitical tensions, inflation worries, and plenty of anxiety among retail investors. But if you're only paying attention to headlines, it's easy to get rattled. What matters is what's happening beneath the surface, the structural shifts in how capital is moving. Let's talk about something I call the shift in realized value. Take the MVRV ratio. Right now it's at about 1.2. A lot of people just use this as a quick overbought or oversold indicator, but that's missing the bigger picture. What a 1.2 reading really shows is that the market is resetting its cost basis in a big way. Think back to September 2025 when Bitcoin hit $126,000. At that peak, MVRV was over 3.0, meaning most holders were up more than double on their investment, a classic bubble. Today's 1.2 tells us that the speculative money has been washed out. Now, we're seeing more institutional and compliant capital stepping in. By buying at $71,000, these players are turning what used to be a ceiling into a new floor. In other words, Bitcoin is shifting its foundation for this cycle, and that base is a lot stronger than most people realize. The most interesting part of the current setup is hidden in the asymmetry of the derivatives market. I've been tracking global liquidation maps, and the data reveals something physical. Between $72,200 and $73,500, there's a massive buildup of short positions, over $6 billion at risk of liquidation, all packed into a tight range. This creates what I call a pressure cooker effect. Just above that zone, past $75,000, and there's barely any historical trading volume or resistance. That's a liquidity gap. So, if price pushes through and triggers those short liquidations, the market will enter a kind of vacuum with no resistance. The move will be sharp and automatic, not because of any news, but simply because of how the market mechanics work. After watching this market since 2013 and living through 3 halving cycles, here's my main takeaway. If you chase direction in the noise, you're just playing into someone else's liquidity. But if you understand how capital migrates and how the structure works, you can get ahead of the flow. I'm Anselm. My goal isn't to hype things up, it's to break down the mechanics behind the scenes. If you're tired of guessing and want to see the logic behind the numbers, hit subscribe and follow along. See you next time. Let's let the data speak for itself.